Hi, yo, what's going on? It's your boy Chak Investing back here with another video here on the Chak Investing YouTube channel where we're going over daily reviews of NQ and ES. All right. So here's a couple things to keep in mind. We trade the ICT 2022 model. We'll be going over what that particular trade entry is in this particular channel. Very simple, so simple that ICT said that he would teach this model to his daughter. He could teach her any model, right? So let's focus here on what this trading model is. But before we do that, it's very important to understand what's going on a higher time frame, and then we'll get down to lower time frames where we actually execute the 22 model on the 5-minute, 15-minute, 1 minute. Okay. I'm going to try to make these videos a little shorter. I've noticed that they're starting to get like over 30 plus minutes. I think that's way too long. And also, I rewatch every single one of these videos, so I don't want to like have to spend 30 minutes watching that. And if I don't feel like that, I'm sure you guys don't want to either. So let's try to make this a little shorter. That's going to be my goal for today. Max 20 minutes. Also, if you like this video so far, press that like button. I mean, and you know what? Even if you don't like it, just like it anyway, because you're a good person deep down in your heart. I know that. Plus, you could press the subscribe button as well to never miss a single daily video on the Chak Investing channel about how we are going over NQ and ES, as well as make sure you join that free Discord below. Okay? All right, sounds good. So, daily, what do we have today? Today was a no news Monday. Okay. Today was a no news Monday. All right. So what does that typically mean? Typically means that you could see some movement. You probably will see, especially there was a large range day yesterday or we moved overnight. You could see some pretty good action before 7 a.m. Okay. You could also, before 9:30 for 9:30 open, you could see some good price action. Then once the 9:30 opens, if it opens good, then you could see some pretty good Monday AM action. Or if it opens trash, it's probably going to be trash for the rest of the day. Now, PM session on Monday, especially when there's no news, is pretty much 90% of the time trash. So I don't execute anything, no matter how good it looks, on a Monday PM, and I'll show you guys why. Okay, so and these are parameters that are really, really helpful. I'm not going to try and yap too much, but these parameters are very good because when you understand optimal trading environments, you will optimize your profitability. Not every 22 model is a good 22 model. Sometimes it looks like gold, but it's really just gold plated with dung under it. All right, so thank you. Now, what do we have? Today we had a inside day on the daily candle, right? How could you have anticipated that? It's a no news Monday. Probably not going to be a lot of volatility. We had a large range day yesterday, and we didn't really show a willingness to expand lower to go to the previous day low. And it's probably going to be hard for us to expand higher to go all the way to this previous day high. So, around the PM session, when I'm seeing that the candle is starting to look like this, we're probably just going to have an inside day. Plus, what is this green box over here? If you were paying attention, this is a very interesting level right here. This is the TGIF range from last Friday. So last Friday, we did not come into 20 to 30% of the whole weekly candle around the close on Friday. So when that doesn't happen, you can see it happening on Monday. So that was today's draw on liquidity coming back into this TGIF range, which you can say we closed in the lower portion of that particular, period range. And what do I mean by that TGIF range? Typically, by the end of the week, you can see price return back into 20-30% of the weekly candle, especially if it's a large, expansive candle. Okay. ICT has really good videos on that, so please go watch that if you have the time. All right. So on the daily, and this inside day candle, we have now left this SIBI here. So where can we go next? We're in the upper half of this weekly inversion fair value gap, right? Because we inverted it last week. Now we come back into the upper half of that. We had an inside day. So we could expand in either direction, taking out the previous day low or previous day high. This is what we call a volatility filter candle, right? It's the first candle after an inside day. So like if we had an inside day, the next day should either be an expansion to take out this previous day high or previous day low, or it could consolidate for a while. That's why it's called a volatility filter, to let you know how much volatility there is going to be. Now, I think we have some news going in tomorrow, so we could see that being a catalyst to let price expand. We have building permits. It's orange folder. Not that volatile news. So it could be a consolidation day. So we just have to see how the next day's candle opens. But that's my advice for now. We have this daily SIBI that I'd like to see us return to at the very minimum before we go anywhere else. So if we go lower and we fill this gap here and take out maybe some of these RRs right here, then I'd like to see us return to the SIBI first. But something that also is interesting that's happening on the daily is that we close through the consequent encroachment of this daily SIBI. You close through it, and it kind of looks like we're using the consequent encroachment here as support. So If we see price expanding further and we create a bearish order block going lower, I probably anticipate seeing this stay open and we could see some expansion lower to maybe even this inefficiency, below all these RRs. These are some hypotheses. We just have to see how price interacts with the PD arrays, okay? But that's what happened on the daily so far. On the 4 hour, overnight, we came back, returned into this 4 hour busy, this 4 hour value gap after reacting on the upper half of this 4 hour FVG. Remember what I said on this channel, if you stay in the upper half, you could expand higher. So price closes in the upper half and expands higher, comes into that TGIF range overnight around the Asian session in Sunday, comes back during London into this 4 hour value gap, and then expands higher in the AM session, returning to this 4 hour city, right? And wicking into it and coming lower. And there was actually a 22 model short that happened on the 5-minute that I used as a reaction off of this 4 hour city, which is why it's helpful to know what's going on in a higher time frame, because it can give you more confidence about lower time frame trades. Okay, I'm going to delete all of this up here because not super relevant for me anymore. All right, on the 1 hour, let's delete this too. So what happened on the 1 hour? On the 1 hour, okay, very similar movements. Overnight, we came into this TGIF range. Did not move too much during Asian London. We did see some expansion downwards back into these 1 hour inefficiencies that were also messed inside a 4 hour fair value gap. We wicked lower, stayed in the upper half of this wick at 8 a.m., right? So this is how you could have also known that we were bullish in the morning. Price closed in the upper half of this wick, right? Started expanding higher. So we are probably bullish for the morning. And when I say, like I said, just like over here, where you're closing in the upper half of PD arrays, price can expand in the opposite direction, right? And they can using it as support. Highly likely. Price does that. It takes out all these relatively equal highs above here as well. And think about it. We've taken out this low, taken out this low. These lows over here are jagged. These lows now are a little too smooth. So, when you have a place that we're obviously reacting from and you have a drawn liquidity, plus this TGIF level, which you can see we fill all the way today and stay inside that level for the rest of the day. So you can see this is a valid PD array. Look how we're even reacting with the consequent approaching of that TGIF. I mean, that's really interesting, right? To see that this is really a level. Look at the close on that, close below it, right? So price closed in it. And then in the PM, after hitting that 4 hour CIBI, which is now also has a 1 hour CIBI nested in it, right? Actually, this was in the 11 a.m. hour. We wick lower and we create this 1 hour BISI that price continues to go into and wick into for the rest of the afternoon, but still closing in the upper half of it. Closing in the upper half. So let's actually make that one BISI. Closing in the upper half of this 1 hour fair value gap, right? Never closing below it. So depending on how we continue to act here, price could expand lower and take out some of the LRRs. But because it's hovering in the upper half, my bias would be that it will continue going higher, fill up some more inefficiencies, and go into that daily CIBI that's above here. Okay, the daily CIBI is above this high. So what do we have on the 15-minute? So on the 15-minute, you can see this box right here is opening range gap, right? From last week, Wednesday. That was the drawn liquidity for Friday for me, plus this 4 hour BISI that we reacted from and reacted in the upper half. Remember that? Price has now filled a lot of this in. We now go higher, and we have Friday's opening range gap, right? Opening range gap, if you don't know what that is, ICT does a really good series on it, but it's basically just the RTH view of the 4 p.m. or the 4:59 p.m. close plus the 9:30 a.m. open the next day. This is a gap that price likely is going to fill in. So that obviously drew price higher today. We couldn't get there, but that could be a nice target either for tomorrow or sometime this week. I'd like to see that get filled back in. All right. So what happens on the 15-minute? Don't waste too much time here. Price consolidates here on the TGIF level overnight, and then we come into this we come into this CIBI right here. We fill it a little too strongly, for my opinion, but price breaks down, creating a BPR, right, going into London session, and then we create a low here at 8:15, go higher, trading above the constant encroachment of this 15-minute CIBI, come back into this BPR, find some support there on top of the constant encroachment of Wednesday's opening range gap, and goes higher going into 9:30 open. Or actually 9:30 had that Judas swing, but then we're reacting off this this bullish order block over here after purging this liquidity, and we have these LRRs here on the opposite end. So we have that Judas swing in the 9:30 open. We close after wicking into this bullish order block and expand higher, taking out these LRRs, drawing up here ultimately, filling in a TGIF range, and then by 11:30, which kicks off the lunch macro, right? Which can happen anytime at 11. It could happen at 11:50. It could happen at 12. But after 11:30, you should start looking for that lunch macro where we're going to come and oppose the daily range. And this is also nicely coinciding with a 4-hour SIBI, right? Let's just draw that 4-hour SIBI line here. So nicely coinciding with that 4-hour SIBI, creates this 15-minute fair value gap. It stayed open, interestingly enough. Since that stayed open, I would have liked to see price expand a little lower, maybe take out these lows from AM. But it's a Monday PM, so time of day did not permit that to happen. So we always have to keep in mind, time of day is also very, very important, right? Because Monday PMs are trash, typically, very, very, very often. We do get a move lower, which is actually where the 22 model I took today, where I made some slight profit, ended up, forming around here, leaving this gap open. And then, 1 p.m. we come lower, form a low here at the high of this. What is that? Oh, it's a 4-hour, 4-hour inverse fair value gap. So price fails to make it through this 4-hour inverse fair value gap and then bounces between this TGIF level consequent encroachment and the 4-hour fair value gap for the rest of the afternoon. A lot of times you can see that happening in PM where we're just bouncing between, key PD array levels. All right. So that's the 15-minute, 5-minute. So these nice relatively equal highs over here. Price takes out all this liquidity below these lows coming into the AM session. See how we got some nice movement pre 9:30 AM on a Monday in no news. Typically that is very typical. Price has this low, high, lower low, break of market structure above this high, reacting from this 5-minute BISI with clear drawn liquidity is higher, plus this 4-hour SIBI and the opening range gap above. This is a very nice 22 model, right? So this is what the 22 model looks like. When you have a low that is taken out by another low right here, right? And you can see this high is broken and it has a fair value gap. Those are the three things that makes a 22 model, okay? So you have purge liquidity, break of market structure above a high right here, and there needs to be a fair value gap. Okay, fair value gap is the gap between these three candles, right? So 1, 2, 3, where there's just a body and no wicks. Okay, so that shows displacement because you can see the price starts moving higher. So where would your entry be? All right, so because this is now a breaker over here, you see this candle? That's a breaker. All right, if you don't know what a breaker is, make sure you go search it up. ICT has really good videos on it. That's a breaker. Fair value gap. And you have this inversion fair value gap right here. So that's 3 PD arrays. So your stop loss is going to be below these 3 PD arrays. And because we broke above this breaker, we closed above it. And then look, you have this inversion fair value gap right here too. So because we closed above it with such speed, your entry should be on the high of this fair value gap. Oh, it's on the high of the breaker. Or it could be on the high of this inversion fair value gap right here. And because we have this very nice inversion fair value gap that we closed above, on a good price action day, price should not come back through this inversion fair value gap too much, right? It can wick through it, which is why you want to set at least a good 3 PD array. So maybe you can set it below the consequent encroachment of this breaker right here. You can eyeball that. Enter at the high of that inversion fair value gap. Price returns back into it. Because you can anticipate a fair value gap forming. There's been multiple fair value gaps forming on the 4-minute, 3-minute, 2-minute here as well. So you can anticipate once we close above this, like, right, there's going to be a fair value gap right here. And then price goes higher, you can aim for 1 to 3. You see, you get that. It's above these highs, but you still have that 4-hour SIBI as the high. So that's a nice 1 to 3 right there. Let's check that on a 1-minute though. You can see the same thing here as well. Low, high, lower low right here. Break of market structure. When I see a very high, like very large 22 model like this, I like to go to a 5-minute or a 4-minute. I mean, it's probably gonna look cleaner there, like you saw in the 5-minute, but you can see that clear 1-minute fair value gap that we come back into that keeps all these these fair value gaps here open, plus that 5-minute inversion that's over there. That's right here. Price comes up to the top of that and then expands higher. Right. So that's a nice 22 model right there. Okay. We expand all the way higher, all the way till 1030. We start to consolidate. High right here. We purge that, come back lower, and then we enter here. This is technically a 22 model because you have this high, low, higher high as well. Doesn't look super clean though. So I ended up taking it on a lower time frame. So here the 4-minute looks a little better as well, where you have this, bullish order block candle right here. That would have been a nice place to keep your stop above. You have this fair value gap plus a break of market structure and a purge of liquidity up here. So this is the one I ended up taking. Stop loss was above there. In for 1 to 3. Now, price broke lower. I took out half my trade right here. And then price broke me even, but ended up coming back a little lower. Never would have got my 1 to 3. But whenever I get halfway, I would take out half my trade. I have really good videos on that called my best risk reward strategy. Go check it out in my how to trade IC22 model playlist. But then you can see once we enter the PM session, once we enter lunch here, and then we got our last move right here, pretty much. Once we get to PM, like price just going up and down, pretty choppy price action. So that's just characteristic of when the PM. And here on the 1-minute, again. So we had that 930. What was the 930 open? So 930 open here, expands lower, come back higher, but there's no trade here yet, no clear break of market structure, right? So we come lower again, and then we break higher, forming that 22 model. First stage accumulation, second stage accumulation, fill in the whole TGIF level, come in to this 4-hour SIBI. We've moved a lot, so price starts to consolidate next session, and then we form a propellant block here. Come back up to this low and then start going lower. What time does that happen? Around 11:46, so just before that 11:50 macro. But we're starting that lunch macro, right, where price can start coming back into and filling, come back to equilibrium of this move and probably take out some of the people who are in profit, people who have made money from the longs all day, and then consolidate until about 12:45, and then price hits the high of this 4-hour inverse fair value gap, expands higher and takes out some of these LRRs. And then starts expanding lower again. Around 150 or so, we make this low. Price expands higher, takes out this high, comes back again, takes out this low, and then so on and so forth until we close the day. All right, so that has been today's review. Like I said, trying to keep these a little bit shorter. I'm not trying to yap too much. But we see not too much happened on this Monday, no news, but we did have 2 good trades that price could have gotten into. We would have made too much money here, but this would have been a really nice 22 model if I was, really locked in on trading the AM session, which I was not. So, but yeah, 2 good trades today, and yeah, make sure you like the video, subscribe, and press that comment button, or leave a comment below on what you want to learn next. But that's been it. See you guys in the next video.